Hi, everyone. I'm just going to give everyone a second to join, and then I will kick off at 11 on the dot. But in the meantime, please feel free to introduce yourself in the chat section. Be sure to click to address it to everyone, not just your host and panelists, so that everyone can interact together. Tell us where you're from, where you're dialing in from in South Africa or internationally. Yeah, I see some familiar faces in the participants. So welcome back to another Finance and Indaba Network webinar. Great. So as everyone starts coming in, I think it is time to start because it's 11 on the dot. Welcome everyone. This is a webinar that's sponsored by Zoho Expense. It's part of our Finance and Indaba Network webinars, where we share some of the leading topics and you know the issues and challenges and even opportunities facing the finance industry. We're very excited to present or to introduce you to Unni S from Zoho Expense. He will be taking you through Operation Target Growth, how CFOs can use digital finance to improve their business performance. So every finance department wants to support their business in achieving growth, but what's the quickest way to get there? Some believe it's digitization, but is this really the case? And if it is, how transformed is your finance function really, and how equipped is it to deal with digitization? It's been touted as a way to ensure that finance improves operational and strategic importance. In this webinar, Unni will give you a little rundown of how you can make sure your organization is mature enough to leverage digitization and target growth. Without further ado, Unni, I will give the floor over to you, and you can tell CFOs how they can target growth.
Thank you so much, Kellen. Hi, nice to meet you, everyone. So let me just start with my sharing my screen. So, Kellen, I think we can start, right? I mean, do we need to wait for some time or?
No, you can go ahead.
All right. So once again, hello, everyone. Good morning and good afternoon to people who are in other regions outside South Africa. So my name is Unni. I head the business development and strategic partnerships at Zoho's Finance suite of applications. And today I'm going to talk about how the digital finance and how the finance function within an organization can reimagine itself to become a strategic partner within the company. So before I go into the topic, like here is a quick overview about Zoho. Just a second. Yeah. So we have been in the business since 1996. That is more than 25 years now, and we have offices in more than 10 locations or 10 countries. And our customers are spread across 180 plus countries. We are a bootstrapped, profitable company with more than 10,000 employees as of now. And Zoho Corporation is made of 3 divisions. One is WebNMS, then second one is Manage Engine, which serves more of IT departments. And the third one is Zoho, which caters to the business applications, of which provides a lot of business applications to cater the needs of various business functions. And so this is our global footprint. So we have offices in the US, Mexico, Europe, UK, Dubai, South Africa, India, China, Japan, Singapore, and Australia. We also have data centers in most of these locations. So as I said, we started in 1996 with WebNMS, then we launched Manage Engine serving the IT departments. And Zoho was launched in 2005 with a word processor called Zoho Writer. And that is our first application. And from then, over the next 16 years, we have built more than 50 plus business applications. And each of these applications, so we have never acquired any application, or we have never taken the technology from someone else. It is all built from the scratch by Zoho. And all these applications that you see like serves different purposes. Like we have an inventory and order management software. We have an accounting solution called Zoho Books. We have a travel and expense management application called Zoho Expense. And we have an HRMS suite called Zoho People. So each of these applications, I mean, they are independent as well as they work with your existing ERP solutions like SAP or Oracle or Microsoft Dynamics. So whichever is your current ERP solution, it works with them or it integrates and work with them. In additionally, all these applications can work together to give you a single app experience too. So these are like these 50 plus applications are contextually integrated to one another. And together we have around 75 million plus registered users across the globe. And so that is about Zoho. And so here is a quick look at the agenda. So in the first section, I'll be talking about how you can assess where you are on your digital transformation journey. In the second section, I'll be talking about the key characteristic differentiators between the traditional finance and modern finance or digital finance. In the third section, I'll show you how technologies like cloud and AI can be adopted within the function so that you can realize tangible gains. And in the final section, I'll be talking about how I envisage modern finance should look like so that the finance team can play a more strategic role within the organization. So what is digital finance? Maybe we can step back a little and ask ourselves, what is digital? So the word digital means different things to different people. So does it mean like adoption of one of these technologies like AI or ML or cloud or blockchain or RPA to your business process? Or so for sure, some of these technologies has been really transformational. For example, cloud has helped us a lot during the pandemic era, and AI and ML has well entrenched this ecosystem today. There are a lot of brilliant things that is happening in fintech. And of course, there are some buzzwords that comes and goes. So but for me, digital is more of a philosophical thing rather than just a technology or adoption of a technology into your business. So I take digital or like this as a evolution of or a three-stage process. So the first stage is digitization. So here we are primarily focusing on, I mean, as the term implies, like the bits of paper into bytes of data in your computer. So basically going paperless and ensuring that all information is available on your computers or other devices and accessible from anywhere. So the focus here is on the information and not on the process. So let me give you a few examples. Like let's take, suppose you're sending invoices to your customers and you're sending them paper invoices. So that means, and maintaining all these ledgers on paper. So that means you haven't digitized your AR process. Instead, if you're sending invoices online via as a PDF, or like you're providing a portal to your customers, allowing them to download those invoices, that means you have digitized your AR process. Similarly, on the AP front, on the accounts payable front, if you're allowing your suppliers to send you the invoices via email or as a PDF, and that means you have digitized your AP process. Let's take another example on the employee experience front. So if you don't ask your employees to queue up at the finance desk for submitting their expense reports or collecting reimbursements, instead, you're providing them with a portal where they can create their expenses and submit them for approval and even gain the reimbursements online. That means you have digitized a part of your employee experience process. So let's take one more example, a newspaper publication. So a newspaper publication, if it allows the readers to download a copy or a PDF copy of their publication instead of just purchasing the physical copy, that means they have digitized a part of their process. So once you have digitized, the next stage is digitalization. So here we move beyond information. So here the focus is on the process. So sticking to the same examples, in addition to allowing your customers to receive invoices online, if you're also allowing them to make the payment online and that payment automatically gets reflected on your backend systems, then you have digitalized your accounts receivable process. And on the AP front, if you're allowing your suppliers to send you the invoices online, and if you have automation and technology that can extract information from these documents and record it in your system and route it through an automated approval workflow whatever is necessary. That means you have digitalized your AP process. Let's go back to the newspaper example. So in addition to allowing the readers to download the PDF copy of the publication, if they allow the readers to subscribe and pay online, that means they have digitalized their checkout process. So here, if you notice, the focus goes beyond information and the aim is for complete automation. And the way you evaluate how successful this is by understanding how much of your resources you are able to deploy for more value-added tasks than the regular manual tasks that they do. So the key is process efficiency. And the final stage is digital transformation. So here, once you have digitized and digitalized, we have to ask ourselves whether we are able to respond to the market needs quicker, like whether you're able to adapt to new business models, whether based on the customer profile and customer performance, are we able to quickly realign ourselves? So the focus here should be on adopting a completely different business model and responding to the changing market needs. Taking the same newspaper example, if the publication allows its readers not to just read online, but they also provide some additional content, like let's say with the textual content, they put in some like videos or audio files and images. So that means like the reader has like more options or more things to see in their publication. And they also provide some kind of subscription plans, like let's say a premium subscription plan, which allows the readers to interact with their senior journalist and ask questions, or maybe even purchase a content. Like let's say I want to purchase a photo which the journalist had taken, or like download an article and use it for my own purpose. So that means the newspaper publication has entirely transformed their business model. That is, using technology, they have transformed their business model. So if you are able to adapt to newer business models using technology, that means we have digitally transformed our business. So as you see, it is more on a customer, for the focus here is more on a customer driven strategy. That is, customers, like the customers gain more out of the transformation that you make. So next, let's see how the digital finance differ from traditional finance. So when we think about finance, typically reports like balance sheet, profit and loss statements, or cash flow statements. So these are some of things that comes to our mind. And the finance department, which is headed by the CFOs and finance directors, they are responsible for ensuring that these reports are generated on time and they adhere to the standards such as IFRS, GAAP, etc. But if we think through, much of what of these reports show are a little backward looking in nature. So they tell how your business was performing in the recent past, not how it is going to perform in the near future. However, today we have technology that can glean insights from multiple departments within an organization and even outside, and provide you with forward-looking metrics in real time and help you with leading indicators that tells you how your business is going to perform in the near future. So basically, you can perform predictive analytics on the data instead of doing descriptive analytics on the past data. So this fundamentally arms the finance team with information, helping them to be a driver of any kind of business change. So that being the case, the finance team, which is led by the finance directors and CFOs, have to help in identifying new areas of growth. So typically in traditional way of finance, everything was driven by plans and milestones, and that is mainly to control and manage the risks. However, in digital world, the focus is on leanness. Here, outcomes take precedence over the plans and milestones, and funds should be channelized to ensure that the business is able to experiment and the outcomes are like tested. And even like you have to keep in mind that the outcomes cannot be predetermined. So based on the outcomes, you can channel your funds and foster innovation. Coming to capital deployment, the traditional way, it is typically based on like well-prepared cases, like business cases, and that too prepared well in advance. So this is generally subject to great uncertainty and does not provide the flexibility to quickly adapt to changes, like changing market needs. So it is And this change, I mean, this adoption of changes, it's actually required for companies that look to do small experiments that, and it helps them to respond to the market needs, which will help you gain more customers. And today, finance can break down these initiatives into small atomic units and manage the risks and outputs of these units, and it can be measured, and then you can decide whether this initiative have to be funded or not. Furthermore, budgeting based on siloed activities, that is also old style. For example, setting a budget for a department, and like, let's say marketing budget for a department. But today, organizational practices are more based on cross-functional activities, and that is more widely representative of the company. So finance team must foster transparency and measure performance, cutting across like the traditional organizational boundaries like departments and all. And finance team also should take advantage of the changing cost structure. So, I mean, today most of the costs, it can be operationalized or expensed instead of making it a capitalized expense. So for example, investment in technology or investment in a service. So that was typically a fixed cost, like in the old era, but like right now, like there are plans, like today you can pay for your usage that is as and when you use, and the underlying infrastructure is automatically provisionalized. So there is a change in the cost structure, and the finance team definitely have to take advantage of this. Now, coming to compliance, we have to keep in mind that the compliance needs also keep on changing, either here or somewhere in the world. So the GDPR model of privacy by design is the best one to adopt, and you have to build in controls that meet privacy and compliance objectives in a future-oriented manner. A quick recap of the first two sections. Like in the first section, we spoke about like how to assess where you are on your digital journey. And in the second section, we discussed like the key characteristic differentiators between a traditional finance and digital finance. So in this section, I'll be talking about some specific areas in finance where you can adopt technologies like cloud or AI and realize tangible gains. So what are the key areas of focus for a CFO? I've defined it as 3 C's. That is cost, control, and compliance. Let's take cost. The very adoption of cloud-based technologies itself can represent a potential cost savings of over 30% on their on-premise equivalents. At Zoho, we have realized around 75% reduction in our IT spend, even after accounting for the fact that we ourselves pay for the tools that we use from Zoho. Look, 84% of their time on invoice processing. That is.
Unni, I don't know if you can hear me, but there seems to be a break in your connection.
It's just leaving active activities. It's like, yeah. Sorry, Kevin.
There seems to be a break in your connection. I think, can you just go back 2 slides and just go through that again?
Oh, sorry. So
there you go.
Yeah, this part was clear.
Yes.
Okay. So what I was saying is like when we take cost as one of the key areas of focus for a CFO, like adoption of cloud-based technologies itself will provide you a cost savings of 30% or over their on-premise equivalents. And so within Zoho itself, we have realized a tangible gains of around 75%. That is even after accounting for the fact that Zoho pays itself for the tools that we use within Zoho. And that said, these are the key areas or specific heads in finance where we need to focus, or where finance team need to focus. And let's take accounts payable first. So there is an IOFM report which says that around 84% of an accounts payable staff's time is spent on invoice processing. That is just leaving 16% of the time for more productive activities. So this is an area ripe for disruption. And so with the adoption of cloud and AI, you can automate repetitive tasks and eliminate much of the data entry. AI tools like OCR, it can extract information from documents and it can be routed for approvals and exceptional handlings, etc. And within the supplier ecosystem, we can have the financial document exchange, which can even completely eliminate the AP invoice entry. So furthermore, operational efficiency can be increased where AI can train itself to recognize the document and perform necessary tasks. For example, AI can learn the supplier to whom the PO has to be sent, and it can automatically route it to that particular supplier. On to the payments front. Today, you can pay off your suppliers directly from your accounting or ERP solution. So with this, you don't have to juggle between your systems, like your accounting system and your banking system. You can do it from, or like even create upload files. So that is one common task everyone does. So you don't have to do anything. You can simply integrate your bank with your accounting or ERP solution and perform those payments right from within the accounting application. Next is the AR, that is accounts receivable. An average organization can reduce its trapped cash by nearly 33% by simply reducing the DSO, that is daily sales outstanding, by 5 days. And as the stats shows, an automated system, it can reduce 20% in DSO, 25% in bad debt, in 25% in past due receivables, and 15 to 20% in bad debt reserves. So it's imperative that we have to constantly think about solutions that can help you collect money from the customers faster and in a better way. So here are some ways that you can do it. Like you can provide a self-service portal for your customers. You can provide multiple payment options for your customers like credit card, debit card, or net banking, wallet, QR codes, etc. And finally, payment chasing. That is, you can send automated payment reminders to your customers so that you can nudge the customers to make the payment online. I'm sorry, make the payments on time. Next function is travel and expense. So why is that an important function that you need to focus? Because it is the second biggest expenditure after payroll in an organization. And it is the single largest variable expense. So should we reduce travel or optimize travel related costs? When many faces this question, what they do is they reduce the number of people who are traveling, but that's not the right way to do that. Mainly because like there are multiple studies that says for every $1 that is spent on travel, the returns is 10 to 15 times. In fact, like face-to-face interactions increases the chance of conversion by 50%. So if this was a physical event, I would have been there to address you all. So why should you consider a travel and expense management solution? It helps us in multiple ways. One is like from the organizational perspective, it removes a lot of paper, eases employee experience, auto captures all the data and posts it to your accounting software or ERP solution. Thus by providing or like giving a lot of administrative convenience, it nudges your employees to complete their expense reports and submit them on time. Also make sure that the spends are within the policies that you have defined. It also helps you to define the right kind of travel within a company. So as this example shows, there is a global company which like had a spend of $750 million per year. They could reduce that spend to $350 million just by tracking the purpose of the expense and having some controls on internal travels. In simple words, you can discard the shoebox, like declutter your desks and have everything in a very nice, organized manner. So most travel happens for sales reasons. And it makes sense if these two systems talk to each other. And from a finance perspective, it actually, gives you a completely new dimension about your spend. You can understand how much money is being spent on acquiring a new customer and whether the spend is happening on the right place. That is the money going to the right sales opportunities? Next is compliance. So as I mentioned earlier, the GDPR model of privacy by design, that is going to be embraced going forward. So your system should be designed in such a way that compliance part is future oriented, assuming that something or the other is going to change, be it loss of privacy or the way you handle the customer's data, etc. And above all this, like moving beyond privacy, there are compliance aspects like tax and policies. So if you take payroll or tax, when you have a new office or when you launch a new office in another jurisdiction, the local taxes applies. You cannot keep on investing on new systems to ensure that you comply with the respective tax laws. The existing system should be capable, or it should scale to accommodate the tax laws regardless of where your organization is located. Adopting this kind of a system or a cloud-based system helps you minimize the maintenance costs. And furthermore, what it does is it audit proofs your complete AR and AP platform. You will not have to keep on checking whether right kind of taxes are applied or right for the right kind of businesses, because there are hundreds of rules based on where your customer is, where you're located, I mean, what kind of goods you're selling and what kind of services you're offering. So the taxes may vary between, vary between regions and the customers, drastically. So cloud-based systems can use APIs to validate all of these rules, and the right kind of system, it can ensure that you are always compliant. Coming to policy compliance, let's take an example of FCPA compliance, that is Foreign Corrupt Practices Act. So it is applicable for US companies. When you attend an event and you entertain some of your business contacts, so you have to record who are your attendees and what was the expenditure and for what it was the entertainment for. So all these are some of the regulations that you have to follow, and when audit comes, you should be able to pull up these records. And one more point is fraud. Like a lot of fraud can happen in this area, and your systems should be capable of automatically detecting them. Some fraudulent activities, like it might be unintentional too, but still it is good to have, it's really must-have check that you need to have in all your businesses. The third part where finance plays a key role other than cost and compliance is control. And here I'm talking about strategic control. So let's take a business initiative. Any company that wants to transform a part of their business or like invest in a new initiative. In much of these discussions, the finance team comes into the picture at a very later stage. Finance will be involving in for signing a check, or basically the finance department or the CFOs or finance directors, they come into the party very late. This is a little unfortunate considering the fact that, considering that the finance team can provide a lot of valuable insights for the business's new initiative. Let's assume a business head decides to invest in an initiative, and he or she claims that this initiative can realize around $100 million in additional growth. But if the industry norm is $200 million, then this is not a great initiative, or something is not right. So only the finance team can provide that kind of insight. So it is important that finance provides or establishes a clear financial baseline for the business when they are starting up or when they are moving on to a new initiative. And how do you measure if the initiative created a value? Let's take another example, like a sales head who says that who has hired 100 salespeople and claims that the revenue has gone up due to the hiring. Now, the revenue might have gone up, but if the operating margin is very low, then the additional revenue doesn't make much sense. Then that means this particular initiative or this particular action hasn't created much value. So to establish a clear financial baseline and to measure if the initiatives are creating revenue, the finance team might or should get involved in this initiatives or discussions of these initiatives in a much earlier stage. And finally, how do you ensure that these benefits of the initiatives reach the bottom line? Here again, finance team can provide valuable insights. It may not show up on your profit and loss statement because it might not have gained much of the cash flow for that. So it might be non-cash things, like example, your work changes in your working capital, which are not actually reflected on your P&L, but it provides great business to your business, great benefits for your business. So it is these kind of insights that the finance team can provide, and they are invaluable inputs. So this is all possible today because of the fire force of information that is available through various sources and that can be contextualized, thus by allowing the finance team to own the analytics path to gain operational control over various aspects of business. Now, a quick recap on the previous three sections. Like the first section, we spoke about like how you can assess where you are on your digital journey. In the second section, we spoke about, the key differentiators between traditional finance and the digital finance or the modern finance. In the third section, I spoke about various aspects of finance like cost, control, and compliance, where adoption of technology can ensure great results. And this is the final section where I'll be talking about, or I'll be sharing my perspective of what a modern finance should look like. Again, we have 5 C's here. So modern finance should be connected, it should be collaborative, contextual, continuous, and finally, and most importantly, customer driven. So what do I mean when I say the finance should be connected? So finance team should never work in silos, especially the finance systems. We have to ensure that they are connected upstream with various external parties and downstream to various other systems that you use internally. Let's take banks as an example. So banks play a very critical role in today's business. You pay the suppliers using your bank account. You collect payments from your customers through bank account. You make payments to your employees, like maybe reimbursements or payroll, everything through your bank account. So it is very important that banking is an integral part of your finance system. So currently the ERP solutions or the accounting systems that are cloud-based in the market, like it's capable of integrating with your banking systems, and you will be able to do banking transactions from within your finance system itself. So banks are one major player, and other one is the tax authorities. Obviously, all companies pay taxes. There is like recognized tax authorities in each jurisdiction, and companies need to find a way that the system works seamlessly with tax authorities so that the tax compliance part in your system is completely streamlined. And next one is the suppliers. So suppliers are very important part of your ecosystem. Like you have regular suppliers, like from which you procure items on a regular basis. So let's take an example of an invoice which your supplier sends. So your supplier's AR invoice or accounts receivable invoice is your accounts payable invoice. We can ensure that the financial document exchange happens automatically, where the supplier can create and upload it, and that will automatically get reflected in your accounting system. So this has multiple benefits. One is it ensures immutability of the transaction. That is, they cannot make any changes to that transaction later. And obviously it removes any manual task like data entry whatsoever. And once the transaction is authenticated by the authorized buyer, the supplier can use that for raising financing. So this is an emerging industry, supply chain finance, and we are seeing it. We're already seeing a lot of trend that is happening within the Zoho's customer ecosystem. So your ecosystem actually goes beyond suppliers, banks, and tax and revenue agencies. So today we have transportation partners like Uber, Lyft, your travel vendors, like the travel management companies that you use to book flights and make hotel reservations and book cabs for your employees. So it is very important that the transactions that you have with them comes in seamlessly to the respective systems. It may be the accounting system, or it may be your employees' travel and expense system. So, and additionally, if you are into a business of selling goods, like you need to ensure that your systems are integrated with your shippers and couriers so that they can, the tracking of the shipment and the real-time status updates about your shipment, it can be seamlessly seen from within your finance or inventory management system itself. And again, we are talking about omni-channel marketplace. Like it is expected that you sell your items in all the marketplace or all the prominent marketplaces that you have access to. And finally, on the productivity front, again, the finance doesn't work in silos. So just like a banking transaction can be executed from your finance system, you need to ensure that a finance transaction can be executed from a system of your user's choice. Let me give you an example. For example, the sales team, they should be able to raise an estimate or an invoice from their CRM system itself. I mean, they shouldn't have access to the accounting system, but they should be able to raise an estimate or an invoice from their CRM system. Another case, like an expense report or a travel request that is submitted by your employees. So without going into the travel and expense system, a chatbot can help you make an approval or a rejection of that particular request. Or even from your email application. From the email application itself, you should be able to perform these kind of day-to-day tasks. So this can improve the employee experience by pushing the envelope on the productivity front. And so that is about the connectivity part. Now, finance being collaborative and continuous. So pandemic has made sure that we all can work remotely. That is the systems. I mean, we don't need to be together to work. The same is the case with systems. Like we should be able to run discussions around specific records or transactions, assuming that no one in the office is near you. So let's take budgeting as an example. Like how it happens today is in a sequential manner. Like each department sends in the budget, like for the files to the finance team, and finance team sits and prepares the budget and uploads it. So what we have to look at is more at a collaborative front. That is collaborative budgeting, so that it makes it iterative and ensure that the feedback loop is continuous and the feedbacks are incorporated much faster. All this helps the finance team to provide more value-added services to the business and also attain month-end closures and tax season closures much faster and without bringing in any business interruptions. And the other players or other parties that is involved as customers and vendors, they also can take advantage of your collaborative and continuous approach. So if you can provide a self-service portal for your customers and vendors, like they can access all the transactions like invoices or purchase bills, everything from their self-service portal. You can even run discussions about a transaction. Like for example, a customer, you raised an invoice to a customer. If customer has some questions, they can put those questions in that portal and you can run a discussion around that transaction from that portal. So this actually acts as a platform for engagement, for customer engagement as well as vendor engagement. And now coming to the most important asset within your organization, which is your employees. The finance team should ensure that the employee experience is seamless, like how easily you can make your employees access to all the information. Say if you're, if you're providing loans to your employees, how easily can they avail it? Basically, what we are talking about is systematizing the entire collaboration front. So accounting and finance, beyond being connected and collaborative, it has to be continuous in nature. So when I say continuous, like let's say over the past decade, we saw two major paradigms. One is cloud and one is mobile. So cloud ensures that your data is accessible anywhere at any time. So basically the data availability is continuous. And mobile ensures that the input and output part, that is interaction of the user with interfaces and the data, is also continuous. Like you can record transactions, play with any particular transactions anywhere and anytime. So these two together, that is the input, output, and the data, has made the computing also continuous. But in finance teams, we still talk about batch processing. We set aside some time for month-end closures. So when computing is continuous, there is no reason why accounting cannot be continuous. So this is one of the most important factors or most important aspects of modern or digital finance. And finance has to be contextual in nature. So as I mentioned before, there is a firefox of information that is available for the, available within the finance systems. So with integrated systems, the data is free to flow and show up contextually in other systems. For example, the salespeople who lives in the CRM, you can have the AR information of a particular customer, like the outstanding receivables or unused credits of a particular customer in the CRM system. So this will help the salesperson. So for example, if there is some unused credit for a particular customer, the salesperson can upsell an item to that particular customer with that unused credit. And another context is like the inventory and order management. So if you have the inventory details in your sales application, in your CRM application, the salespeople can make the orders much quicker. That is like they know whether the item is already available in your stock, and if the item has been ordered, where the shipment is currently, if there is any receivables from the customer for that, for the further processing. So all this information you have to make contextually available for your sales team through the finance CRM integration. And on the help desk front, so you can provide proactive support. Like, let's say for your highest paying customer, if you need to give a priority support, if that is one of your business models, you can do that by having the finance data sync into your help desk solution. Now coming to HR and finance. So like, this is an example of administrative convenience. Like if you have, if you can sync the HR information to your travel and expense software automatically, it removes a lot of administrative challenges. Like the employees, as and when they join, they get active on their expense management application. They can start recording their expenses. They can start raising requests, all from within the application seamlessly. And when marketing and finance start talking to each other, you can run targeted campaigns. So for example, you're selling a particular kind of item, and if you want to run you're selling a couple of items, and if you want to upsell another item to a particular kind of customers, so if you have the finance data of that particular customers, like if the people who purchased or customers who purchased XYZ item, you can send targeted campaigns to that particular customer list from your marketing application. So we saw, so these are the kind of contextual integrations that empowers various departments within the company to perform better. So we saw why finance systems has to be connected, collaborative, continuous, and contextual. Finally, finance has to be customer driven. Why? So we say that finance can play a much larger strategic role in the company, but who decides this strategy? It is ultimately the customer. So customer-driven finance is a operating philosophy where your entire finance system is designed keeping the customer in mind. So how do you become a customer-driven finance function? Simply revisit all your processes, the technologies that you use, and see if that quickens the order to cash process. Also revisit the customer touch points and make sure that they are painless for the customers. And if you're able to gain, like from these touch points, if you're able to form some insights or glean insights from these touch points of the customer to forecast financial performance. So today there are subscription-based models that are being adopted by a lot of companies. Thus, instead of focusing on having a one-off sale, you can focus on having a long-term relationship with the customer. So that being the case, we have systems to automate payments and renewals, drive recurring revenue from the customers. And when you move in this direction, the metrics that you need to evaluate your business also will be a little different, and finance team should get familiarized with it. Traditional ones are still there, but the new ones like customer profitability and the lifetime value of the customer also need to be focused on. So that is all about today. That is all about the digital finance and how I envisage the modern finance should be. And now if you have any questions, like, we would be happy to answer them. Thank you so much for your time.
Thank you so much, Unni. That was really insightful and really great. And I hope a lot of our attendees learned a bit or quite a lot about maturing their organizations digitally. As Unni mentioned, now is the time where you can ask your questions in the chat section and he will answer them for you. I think to kick the questions off, Unni, I have one question for you. And what is your best piece of advice for organizations who are stuck at that bottom level of maturity to get to the next level? Are you there? I think let's just give Unni a second to come back. I see that someone has raised their hand. Please address your questions in the chat section and Unni will respond to it in just a minute while we sort out his connection problems. Type your questions down below.
Sorry, Kylene, I think I got disconnected in between. Sorry.
No
So I
worries.
think it was like, I think your question was like how businesses, I mean, who have started with the first level, that is digitization, how they can move up the ladder and make sure that how their business is completely transformed. So I'll say like to start things slow, like, so if you have started with the first step, that is a very great thing. So first eliminating paper and like moving all the information from paper into the systems. And so once you have the informations on your system, like we can see what are the processes that needs to be changed. Like, well, I mean, that is the next stage, which is the digitalization. So you can identify the processes, make sure that I mean,
We seem to have lost Unni again. We'll give him just a couple of seconds to come back.
sorry, I think it is my internet. I'm just disconnecting the video so that like I get more bandwidth.
Absolutely,
So
I'll do the same.
so yeah, so what I was saying is like, so once you have identified the processes that you need, I mean, like, so first step, as the first step, like once you move all the information to your systems or cloud, like you can then start identifying the processes that needs to be transformed. Like first thing is like, what are the challenges that you face, and the pain points that you face, the pain points that your employees face, pain points that your customers and vendors face. I mean, basically all the stakeholders. So start one by one. Like we have different tools that can help various aspects of your business, like from hiring, like recruiting the employees, to HRMS management, complete HRMS management, creating custom tools, finance applications like invoicing, accounting, then subscription management applications, travel and expense solution. So we have tools for almost all business challenges that any company would face. We even have, as I said, like a custom solution suite too. I mean, we can create custom solutions based on your business challenges, based on your requirements. So I'll be sending an email to all of you, I mean, all of our attendees today. And if in case, like if you're facing some kind of challenges, please do just drop a message, drop a word. I'll definitely get in touch with you, and I'll be happy to help you out on how we can streamline or how we can make your business completely digitally transformed.
Great, thank you. We have a question in the chat from Sandile Gumbi. Sandile asked, on the connectivity function, what would be your comments regarding security concerns organizations may have in opening up their space to external parties, like vendors interfacing with internal systems?
Yeah, so what we are opening up is a portal, that is so for example, a vendor portal or a customer portal. And when we open up the customer portal or a vendor portal to that party, they will only be able to access or see their information. So for example, if you raise an invoice to a customer, the customer in his portal, he'll only be able to see that invoice and the discussions around that invoice. He will not be, or he or she will not be, the customer will not be able to see any other data outside that particular customer's context. Same is the case with the vendor.
Thanks. I see Leonard has his hand up. Leonard, I am going to give you permission to speak, and you can ask your question.
Hey, Leonard.
I think you just have to unmute yourself. While we wait for Leonard, does anyone else have any questions for me? You can post them in the chat and he can give you some insightful answers. I think the next question I might have for you, Unni, is as organizations are, okay, Leonard says his question has already been answered.
Okay.
So as organizations are forced into this, this rapid digitization world, and they have to go through these maturity levels, what would you say is, I have to find the right way to phrase the question. Where would you say, what would you say is a good starting point? So obviously you gave your advice on going to the next level, but what are the key considerations for them to have when they are faced with all of this digital pressure? The focus areas.
Okay, so the first focus areas, see, it's always easy to start with something, something like on the employee experience front, because because that is actually enhancing the employee experience. So again, so if, for example, like you have certain things for which your employees queues up at finance desk or HR desk, you can simply create some forms and start digitizing that process, like online forms, not paper forms, but start digitizing like a HR process or a travel and expense process. So like a travel request. So once you have something simpler, streamlined, then you can move on to, because that, so for example, the travel and expense, let's take our travel and expense case. Like every employee, before they make a travel, they would need a travel request. It will need an approval. They might need an advance payment. And so if you have an application to request or to raise a travel request, get it approved, and once the approval is done, you have an advance, which gets associated with that particular request, and automatically. So if these things are done, like you can see that in one single application, like a couple of forms, like a couple of physical forms are eradicated, are removed. Like a travel request form is removed, an advanced request form is removed, the approval, the signature, and all those things are gone. And even the booking part, the travel booking, you don't need to carry any kind of paper for your flight. You can have all these things inside your application itself. So now that travel and all has opened up, like you can maybe, slowly start moving on to, digitally transforming your travel and expense process. And once that data, so once the expenses, like definitely those expenses have to be accounted. So you have that account, you have all those data in here. So that is actually a small part of the data that needs to be accounted. So start with one process. Once you see the success, once you see that your employees are happy with that transformation, then move into another process.
Great, thank you. I think we don't have any more questions, but if you do, as Unni mentioned, you guys will all receive an email. All the attendees will receive an email. You can also revisit the recording of the session if you have any if you found anything unclear, you can revisit that. But in the email communication, you are welcome to ask Unni more questions, and hopefully he can give you some clarity. Unni, I think as we wrap up and close this session, do you have any final words of encouragement to the attendees?
Nice. Thank you. So thank you so much for spending time with me. Thank you so much for attending the session, and I hope to see you all one day in South Africa. I usually travel to South Africa at least like a couple of times a year. So I haven't traveled after the pandemic, but definitely, if we have a physical event over there, like I'll definitely be there. And I hope to see you all and interact with you all in person. Uh, Thank you again. Thank you so much for your time, and all the best for your digital transformation journey.
Thank you, Unni. You should definitely come to South Africa. We're having wonderful weather. It's a bit cold, but the sun still shines. So
I, I like the weather there. It's better. I'll say it is better than India.
absolutely. Thank you so much, everyone. And thank you, Unni.
Thank you. Thanks, Kylene. Thanks so much.
Thanks.